So, after doing my first two videos, I've had some thoughts about some things I'd like to talk to you about before moving forward. Last night, in my living room, I had a very informal conversation with you about exactly what's on my mind. So here goes. Hi, I'm Jim Wells and I'm a member of Best of Us Investors. And I hope you'll consider joining the tribe so you can be a part of our community. It's Friday night, I'm at home, and just had a couple of concerns. Number one, it's really about the whole volatility issue in space of Bitcoin. I think I've spent the last two videos discussing and talking about the argument for Bitcoin, and I feel very strongly that it's a very strong argument when you take into account the scarcity, the mass adoption, the idea of decentralization, and the whole market cap issue. However, it is an extremely volatile space, and you should only invest what you are comfortable with. Now, what is that going to come down to, comfortable? Well, I think the best thing to do is to, number one, write out your net worth. Write it down. And how much do you have invested in your house? And that's probably your biggest and best investment overall, because if you do pay off your house, it's more money in your pocket. And then you are also able to have that house as an asset, and which real estate has gone up in value over the years. So it's an excellent investment. Number two, do you have an index fund, a 403b or a 401k? And do you contribute to that? And that's completely diversified. I have one, and get anywhere from a 4 to 8% yield is what you're looking for if the market does okay. And you try to limit your volatility because it's so diversified if the market doesn't do that well in a particular year. After that, I have money in equities. I am a big believer in big tech and disruptive technologies, and I have money in individual stocks like Apple and Microsoft, and in addition I have money in exchange traded funds in the big tech space. Number one, as a disruptive technology. Number two, in terms of the monetization of 5G, because I believe in both of those things very strongly. I also believe that Bitcoin fits into that space. So that's what makes it investable. It's a possibility of what is going to happen in the future. So I believe that we are heading in that direction. How much will we go in that direction and how fast is unknown, but I believe we're definitely heading in that direction. So what are your options for investing if you're interested in getting into the space? Well, one thing you can do is you can look into a BlockFi credit card. Very little volatility. If you want to put all of your bills and purchases onto a BlockFi credit card, basically BlockFi is a lending institution that is involved in the cryptocurrency space. And if you put your money into your cryptocurrency into a BlockFi account, then they give you up to 6% yield on interest. And if you take out a credit card with them, they'll give you 1.5% in rewards paid back to you in Bitcoin. So that's an option that you have. If you would like to purchase Bitcoin, okay, we're going to talk about how to do that with wallets and exchanges and all your options in the upcoming videos. But if you want to purchase Bitcoin, one of the things that I think you really need to consider is the idea of dollar cost averaging. I first heard of the term from Anthony Pompolino, who is a very strong advocate for retail investors. He does his own podcast, and he's been on Real Vision and CNBC, and he's interviewed quite a bit. And he's a very strong advocate for Bitcoin in the retail space. And the whole idea of dollar cost averaging comes down to putting in small increments over time. So if you've decided that you want to put a certain amount of your allocation into the space, for me, my allocation is 20% of my net worth into the cryptocurrency space. The majority of it is in Bitcoin. I'd say probably around 75%. Then you have that allocation, the 20% allocation, or if it's 10% or 5% for you, whatever it might be, whatever you're comfortable with, and you put a 10% of your allocation in to get exposure, whatever the price is. If you believe in what Bitcoin is long term, and I probably should talk about that first. So I look at Bitcoin as a 5 to 10 year investment. I think it's going to be much higher in the next 5 to 10 years. Do I think it's going to make a run during this cycle? Absolutely I do. Do I think it could be volatile at a certain point? Yes, I do. And from what I've researched, one of the persons that talks about this is Raoul Pal. And he basically states that if investors have enough money in their profits to buy a car or to buy a house, they're going to cash out. And who can blame them? You know, it's a life-changing opportunity to buy a car or buy a house, and they'll take profits at that point. And it's a very smart thing to do. Now, when will they? Who knows? So, but I think at some point you're going to see Bitcoin run, and at some point you're going to see a major pullback. And I don't know when that'll happen. Right now you have a lot of institutional investors coming into the space. But again, to get back to the volatility issue of dollar cost averaging, the whole premise of it is basically you put in 10% of whatever you're willing to allocate, and then you spread it out over anywhere from 2 weeks to a month, and then you put another 10% in, and you just start allocating. And then at a certain point, if there is a pullback in the market, I look for a 20% pullback, and I put in another 10%. If there's another 20% pullback, I put in another 10%. So basically you're getting it on pullbacks, and so you're decreasing your volatility by buying it on pullbacks, and you're also decreasing your volatility by putting it in over time. So in essence, you're getting an average over time, so it should decrease your volatility in the space. So that's the whole idea behind dollar cost averaging. So, and I would encourage you to do that. I think that's one of the things that you can do. But again, I really think it's important that you don't put money in this space that you're not willing to lose or take a big hit on, because it is very volatile. Now with that volatility, there's potential for a lot of yield, and that's what excites me about the space. If you're protecting your portfolio, you have $1 million portfolio and you're protecting it, you know, maybe you are only comfortable putting 5% in. If you have a smaller amount of a portfolio that you feel like you want to get to a certain point, you're not comfortable where you're at, then you're probably looking for a growth opportunity. So maybe you want to allocate a little more, and you're willing to take a little bit higher of a risk. Raoul Pal and Michael Saylor, you know, they have billions of dollars, and they're all in. But, you know, let's say they lose half of their money. in the space, well, they still have $500 million, so does it really matter? So they've gotten to a certain point where, it's just zeros. So is it really going to affect their life? Probably not. So I think they're in a little bit different situation. I wouldn't put money in the space that you are depending on. But if you believe in the idea of decentralization, if you believe in the idea of what's going on right now in terms of mass adoption with all of the interest that is in the space, if you believe in the scarcity issue, which is very real, and that you see cryptocurrency and Bitcoin itself as having a real future, then yeah, I mean, I don't know if there is ever a right or a wrong time to get into the space. It's just what you're willing to invest and the volatility that you're willing to take. So that's really my main point. And I wanted to make sure that I shared that with you. I appreciate you giving me the opportunity to have a conversation with you. I look forward to discussing some of the options of getting exposure in the cryptocurrency space. Feel free to leave a comment below and anything you'd like to discuss with me. Also, I would encourage you to join the Best of Us Investors Discord. You can find me there in the cryptocurrency space. See you soon.